Hi, everyone. Today, the Fed raised rates. And then we have some charts to look at. And then finally, I have some positions going into tomorrow. And then we'll look at my results for today as well. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future videos. Welcome to the Portfolio Bulletin. Let's get started. So no big surprise, the Fed raised rates today, and they did do 50 basis points like everyone was talking about. That was the consensus view, and they did stick to that. The stock market dropped quite a bit immediately, down almost 1% instantly. It did recover a little bit of that going into the latter part of the day, but the markets did not like 50 basis points, which was a little bit surprising. I expected them to do 50 basis points. But the big thing that did change was that they expect to do more rate increases next year than they were previously expecting. And they also, once again, raised the terminal rate. So they are now expecting to get the terminal rate up to about 5 to 5.25%. Which means that they are going to have to raise rates at least 0.75% next year. While some people were already projecting that they were going to do some cuts next year, but that's not what they said. They said they won't do any cuts until at least 2024, and that they are going to keep rates high throughout 2023 and part of 2024. And they mentioned that here. So they're going to hit 5.1% in 2023 compared to the previous 4.6%, which was a raise from 3.8% in June of last year. So this terminal rate continues to go higher. Markets definitely do not like that. And they also mentioned the GDP for the US slowing down quite a bit. They expect the economy to continue to slow. It's not technically a recession because growth is going to be very slow at 0.5%. And they also project unemployment to go to 4.6%. So they expect the economy to slow down. Not technically a recession because there is growth, but definitely slow down. And they expect the jobs market to get a little bit weaker as well. Jay Powell said multiple times throughout questioning that he thinks the job market is still overheated. There's a bunch of jobs open that people are not filling, and he views that as an issue. That can definitely lead to higher wage increases, which can contribute to inflation, which is definitely something that he needs to be concerned about. But repeatedly, he was very concerned about the amount of open jobs versus the people filling those jobs. He also said repeatedly higher for longer, reiterating the fact that he expects rates to stay high for a while in order to rout out inflation, and that can bring economic downturns. He also mentioned that 17 of the 19 members of the FOMC see a peak rate of 5% or higher, which means there's pretty good consensus that we're going to go higher for quite a while with several rate increases next year. And I think we can expect at least a 25 basis point hike in February. They said they're only going to go about 75 basis points higher next year, so 3 iterations of 25 basis points should be the norm. Moving over to the S&Ps on the daily chart, you can see we sold off throughout the day here. We did hold up above the Monday highs, and we did pause right at that level. I will say, though, that this is looking like it's going to move to the downside and that we're going to get a retest of this 392.50 level. Tomorrow is definitely a point of inflection. If we do move down tomorrow, we should expect that this is going to continue to the downside. And if it's going to rally, it really needs to rally from here. So we already have a double top looking formation. And if it gets down to this low and breaks through, that's going to look like more downside. And then we need to be looking back down to this 373 zone. There's certainly some potential for support in this mid-range, maybe at 389, maybe down here at 380. But I think the more solid support's going to be in that 372 zone that we've talked about several times before. I do want to highlight here on the 4-hour chart, you can see momentum is fading. It's actually fading fairly quickly. If this opens down tomorrow, or if we come down and retest this zone tomorrow, I would expect this to turn negative. If the 4-hour turns negative, then I'm going to expect much lower prices. I've been trading pretty heavily off of the MACD recently, which seems to be fairly successful. And you can see the last time the momentum on the 4-hour chart was fading here on December 1st and 2nd, and then we went negative, and that was a pretty big sell-off here from the highs. And if that happens again, this definitely looks much weaker and that we should expect much lower prices. Moving over to the NASDAQ on the hourly chart, you can see we had some pretty strong negative momentum going into the close. Had that big red bar on the announcement of the Fed rate hike, tried to rally back and sold off. And I would expect this to maybe get up to 288 at the highs here, maybe touch these hourly 9 and 21 EMAs, and then I would expect this to roll over. Jumping over to the 4-hour chart, you can see the same movement on momentum still starting to roll over here. And this will be something that I'm paying attention to closely. We'll definitely be looking for the 11 o'clock close on the 4-hour to see where we're at. But if this momentum continues to go to the downside, then bearish is the trade for now. And maybe we'll find some support here in the short term in this 383, 382 zone. But I'll be looking for that to break through at that area. And if we do get through there, then we have to pay attention to these next levels of support down here at 263, 264. I'm sure there'll be some support at 272, but I'm going to really be looking for a retest of these lows here on the NASDAQ. Moving over to the Russell on the 4-hour, same story here. Just above support, we sold off throughout the day, finished lower. Momentum is fading here. A little bit different here because the EMAs are below the histogram, so it's less of a bigger move down in my opinion. But another thing to note here is that the RSI is looking to bounce off of that 50 level and then turn down once again. I would expect this to fail here, and this looks much weaker than the other major indices. You can see that more of an arc style of price action that we have here. The other two look more like a double top, and this looks more like we have a top, a lower high here, and then we're making a third lower high here, and that we should expect a lower low going into tomorrow. Moving over to IYT on the daily chart, definitely looks like we have a topping formation here. This definitely looks like a consolidation and preparation for a move down. The RSI did come into the 50 zone here on the daily chart a couple days ago, and then it did bounce from there, which is interesting. But if we get a push through the 50 on the RSI here, that's going to be a big indicator that we're moving lower. The MACD here on the daily is still moving to the upside. Momentum is growing here marginally. That's definitely something that I'm going to be looking for on the daily close tomorrow. I'd like to see momentum tick back up to the upside here. But looking at the 4-hour here, you can see the momentum was positive over the last 3 days, and that it is starting to fade here recently. Of course, I would like to see this roll over. I am bearish going into tomorrow. And as long as this top here continues to hold and resistance continues to hold, then I would expect this to at least come down and retest the 144 EMA on the 4-hour chart, which is all the way back down at 216.50. Tomorrow it might be a little bit higher, 217 or so. But either way, this should be rolling back over and coming back and making a lower low in my opinion. Moving over to XLP on the 4-hour chart, this top continues to hold here at 77.50. We did touch it on the CPI announcement. We didn't quite get that high on the FOMC day. So we have a lower high here today. You can see momentum on the 4-hour is ticking into the red here. And if this continues to turn red on the momentum, then we should expect more downward price action. I know we've been talking about that for a while here on XOP. It's been pretty overextended, capped off by this 77.50 level after the big rally that it had. And I would expect this to come down and at least retest back in this zone at $72 or so. Moving over to XLK, the technology sector. This one's a little bit tougher. It does look like it almost broke out here. We have the lines from the top of August to the top of today, which was a little bit out of line versus the other major indices. You can see we did break that previous level here based on these two highs from December to March. But I guess at this point, you can look at it a little bit more like we did get above that resistance here just briefly, and now we're starting to sell off. Momentum on the daily chart from yesterday to today stayed the same. So there's certainly potential that this could tick down to negative momentum. Looking at the 4-hour here, you can see we had bullish momentum over the past 2 days. And then on the last 4-hour candle of today, it did look more negative. The positive momentum did turn slightly less positive here. Looking at that on the 1-hour chart, you can see that bullish momentum going into the CPI data, and then the negative momentum that we had throughout the day here. I'd be looking for this hourly to at least get into that oversold zone before we look at a little bit more of a bullish trade here on XLK. But if this does turn negative, then the 4-hour is going to turn negative as well on the MACD. And that could signal that this is a top here for XLK. Regardless, this looks like one of the more bullish ETFs in the S&P 500 right now. Moving over to XLP, we got more downward price action today. Doesn't look like we're going to get back up to that 146 zone that you would like to see if you were looking to re-short the markets here on XOP. This momentum is starting to fade here. We didn't even quite fill this gap all the way here, which is a little bit concerning. It means we might come back and fill that at some point later. But this is starting to roll over here again. We have momentum on the 4-hour turning slightly less bullish. And then getting over to the 1-hour here, you can see on the last hour of the day, we did turn red. We did get that cross. And once again, I'm going to be looking for that RSI to come through that 50 zone. This is one of those perfect trades where you're oversold conditions on a bear trend, come back all the way, get a little bit overbought, and then you get that push back through the 50 RSI. Then you would expect this to get back into oversold conditions once again. So that's something that I'll definitely be looking for tomorrow. Moving over to top gainers, we have DocuSign on the 4-hour. I don't know how I missed this one, but it's rallied all the way from $41 up to almost $60 here. Did touch $60 here today, and it did not care about CPI or the rate hike at all. It continued to be very bullish. Definitely overextended here. Momentum does look like it's starting to fade here on the 4-hour. Going up to the 1-day chart, though, momentum is still very strong. did just touch that overbought condition here on RSI. And on the hourly, it does look like it's starting to fade. So you could potentially look for a down move here on DocuSign. But based on this rally, I would expect a higher low here, somewhere in this maybe 51 zone. If we get that far down, that looks like a nice little bullish trade. And then I would expect a higher high from there. For our second top gainer today, we do have Lululemon. Looks like we came right to support at that 325 level, 324.50, and then we bounced. You can see momentum is trending in the positive direction. RSI is off of its lows and looks like we have a little bit of divergence here. So we were at the same price for a couple of days. RSI continued to trend higher while we were at that price action, and then we got a little bit of a pop. And this seems like we're going to push back up to maybe 350, 345, somewhere in this zone. I don't necessarily think that we're going to break out and make new highs here, but this could be a little bit of a counter trend rally, or you could wait for that lower high here and then look to trade this to the downside. But right where this is right now, it looks like you have a little bit of momentum here to the upside, maybe about 10, 15 points of potential profits there. Moving over to stocks above their 50-day moving average. If you are a bear, this looks very good to you. Momentum is picking up to the downside. We made a lower low here today. We're waiting to see if this breaks below the previous low of about 76.22 or so. If it does get below that level, we're at 78.50 right now. If we get below the previous low on Friday of last week, then you have to expect that this is going to move lower and that we would at least get a higher low in the markets. Moving over to RSI, certainly potential we get a bounce off of this 50 level. Definitely something to pay attention to, but if we get a strong cross through the 50 level, then we have to expect lower prices on this chart and across the markets. Moving over to SPX divided by the M2 money supply, still looking kind of flat, still sitting it right at resistance here. We did get below resistance officially today, so we were above it going into the 1st of December. Then we got above it during CPI, and now we're ticking right back below there. Momentum is still moving in the positive direction just slightly on the daily chart, but you have to expect that this is a double top pattern and that this is going to break down. And then we have to be looking for a break of this level right here. And if we do get a break of that level, then you have to expect you're going to move back to this previous level of support, which would be the lows from on Friday the 20th of May, and that would be at least a higher low in the markets. Moving over to the dollar on the 4-hour chart, you can see the CPI announcement here, the big red bar that we got. And then surprisingly, regardless of the Fed announcement, the dollar continued to trend to the downside. So this is definitely something you have to pay attention to. As the dollar continues to trend down, that should prop up the markets at least a little bit. Jumping out to the 1-day chart, you can see momentum is picking up once again to the downside. RSI getting into those pretty oversold conditions here at this point. Remember, yesterday we did talk about the dollar maybe coming all the way down to this 101.50, 101.60 level, and that I would expect it to find some support in that zone. But regardless, at this point, this is starting to look oversold. Jumping over to the weekly chart here, you can see we are sitting right on top of that 55-week moving average, really, really close to it. That's currently sitting at 103.294. So just above it, about 0.4 above it. I would expect that we're at least going to come in and touch that, and then you can expect a bounce at least from that zone. So right now we come in, we touch, get a little bit of a retrace at that point, and then you would expect to get a bigger move down in the dollar. You can see we got the cross through the 50 on the weekly on the RSI. That happened about a couple of weeks ago. So the big move through the 50, and we did continue down. We're not in those oversold conditions yet, but this seems like this should be a solid level of support where we are on the weekly chart. Hopefully we get a little bit of a bounce, and that would be bad for stocks, and that would be good for my positions. Moving over to JNK, similar story here. We had bullish momentum over yesterday and part of today. And then once we got that Fed announcement, it looks like we're going to be moving to the downside, maybe slightly above support. You could probably adjust this line and show that it's just below support. Either way here, looks like we stalled right at this 92.70 zone. And that momentum on the 4-hour is starting to tick down, and that the RSI is also moving to the downside here slightly. You have to expect, in my opinion, that this is going to move lower here. We didn't even get all the way up. And retest this resistance like I thought we might. So we're selling off in the mid-range here, right at support. If we do break down tomorrow, that should be a good indicator that we're going lower. But I think bonds might hold up a little bit better if the dollar continues to move down and the stock market is moving down at the same time. Moving over to TLT on the daily chart, you can see where we're slightly positive here today, still sitting right below that 144 EMA on the daily chart. That's currently sitting at 108.50, and TLT is sitting at 107.89, so just below that mark. Seems like the 144 is going to be the top of this rally. We did get above it slightly, almost touching that 110 zone that we were looking at, but you have to assume that this is going to sell off at this point. You can see momentum is really starting to fade here. I would expect this to probably turn negative here tomorrow. Jumping over to the 4-hour chart, you can see we already had a little bit of negative momentum, although we're not quite breaking down regardless of that negative momentum, which is a little bit interesting, and we are still sitting just above the 50 on the RSI. So this downtrend is not quite broken yet. If you want to get bearish on bonds, you would want to see this get below the 50 line at least, indicating that start of a downtrend, at least a little bit. And the way this downward momentum is fading here slightly, you're kind of stuck between the 4-hour and the daily chart momentum. Daily momentum is fading to the downside, and 4-hour momentum is fading to the upside here. So you're kind of stuck in chop, looking for some direction here on TLT. Moving over to the VIX, you can see we had 2 big red bars over the last 2 days on the daily chart. This is not what you want to see if you're expecting the markets to move lower. We are in a zone where we could find some support for sure. And you could certainly argue that there's a little bit of divergence here on the RSI. Last time we were pretty close to this price action for the VIX was 5 December, and the RSI is slightly higher here today, although the price action is slightly higher as well. But really, you want to see this bounce here in pretty short order. If this continues to trend to the downside, that could be concerning. If you are trading to the bear side on the major indices, and looking at the 4-hour here, you can see momentum is building to the downside, definitely not what you want to see. Moving over to the 1-hour just briefly to see what the momentum looks like. It is still building to the downside here. Did get some pretty oversold conditions already on the RSI, which should be good for me as a bearish trader right now. You would hope to see at least a little bit of a bounce here in the VIX. And like I said, we're still sitting right at that support level. Certainly seems like a spot where we could bounce from here. But if this continues to break down, that's going to be concerning and maybe an indicator that I should be taking off my positions and that the market might be moving higher tomorrow. Moving over to my results for the day, you can see I made a little bit over $400, which is pretty good. And I took a bunch of bearish positions here. I sold some calls up at $2.89 for about $1 a piece, 2 calls at that level. Small profit there already. And then I did sell 1 covered put. You can see most of my profits were selling shares here today. I was pretty bearish throughout the day. A couple of bullish trades, but mostly bearish. Most of the profits were from momentum trading. Once again, I did not take any positions until the FOMC data was out, and we kind of established the range that we were going to be in, and some direction at least a little bit. And then we finished down almost 1% on the day. And based on that information and momentum on the 4-hour, I think that we are going to move down a little bit tomorrow. You can see my day trades did go up quite a bit. And then for my totals, I got just over 97,000. And it would be awesome to get this over 100,000 before the end of the year, but that seems like a pretty lofty goal at this point. Definitely comment down below where you think the market is going to go based on the CPI data and now the new Fed comments. It seems like we're going to get hikes throughout the year and that we're not going to get any cuts until 2024. Is that going to sink us into a recession or maybe a depression? Could go either way at this point, it seems like. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.